Okay, some business news now, and Asian shares have fallen as markets keep their eyes on China as it seeks to stabilize its economy. Beijing is trying to revive its slowing property market, and the latest survey also reveals a slump in China's services sector, recording its slowest expansion in 8 months in August. Hong Kong's Seng index led losses in Asia, falling 1.98%. Mainland Chinese markets also dipped into negative territory, with the CSI 300 down 0.83%. US financial advisor Morgan Stanley has come out and said China is overinvested and oversupplied, saying other countries like India are undersupplied. For more on this, let's go to Jamil Ahmad in Dubai. He is the chief analyst at the online trading brokerage GTC Group. Thanks for joining us on the News Hour. So China's having trouble in its property market. Today we found out about its slowing services sector. What does this mean for the country's economic growth? Is it going to be able to achieve that growth target of 5%?
Most likely that's going to come into question. I think the important thing to figure out here is that China's economy was under lockdowns for a number of years. So we have a little bit of a traffic light system going on right now. Although the economy is on green because all systems are go, it's taking time for that car to get back up to speed. And more likely than not, what we really see here is problems for the global economy, because the global economy is so sensitive on demand from trade from China, that actually what we really see here is the weakening China economic picture, and that macro backdrop is really what it's going to do, is weaken economic sentiment on a world level heading into the final part of 2023. So I really see this as more of a slowing global story because of China demand being lower than we would have liked. But China itself, we still think that growth is going to be historically lower, but it's still going to be a far better and stronger performing economy than its developed peers and its counterparts.
Jamil, what do you make then of those comments from Morgan Stanley saying China's overinvested and oversupplied? What do they mean by that?
I think what everybody's looking for now is a new shining star. And by a new shining star, I mean a new shining economy that's really going to come to the forefront and provide some global economic optimism. Because generally speaking, at the moment, things are pretty bleak because we have so much uncertainty over interest rate policy worldwide. Inflationary pressures are still far more higher than we would have liked them to be. And I think that also weighs into the economic macro backdrop. So with China slowing, obviously this adds another cocktail into the mix of the risk. But generally speaking, what the world economy wants to see is some sort of new emerging power come to the fore, some new emerging market growth story that might help us get out of this, stuck between a rock and a hard place, which is where we currently are.
Be interesting to see who will be able to fill that gap. Jamil Ahmad from Dubai, thank you so much. Now to other top stories from around the world. Chinese property developer Country Garden has reportedly made a late interest payment to avoid what would be its first default. Last month, the embattled company missed interest payments of $22 million on 2 US dollar bonds, triggering a 30-day grace period. The move comes just days after creditors agreed to restructure a $536 million bond repayment that was due over the weekend. Australia is planning to extend the life of the country's biggest coal power plant amid rising concerns about future energy supply. The government says it will hold talks with Origin Energy to discuss the possibility of keeping the coal-fired power plant beyond its planned closure in 2025. The plant supplies around 25% of power for the country's most populous state, New South Wales. And Novo Nordisk has become the most valuable European company, overtaking French luxury conglomerate LVMH for the first time. The Danish pharmaceutical giant's stock hit a record high following the launch of its best-selling weight loss drug Wegovy in the UK. The company now has a market cap of around $428 billion, while LVMH is valued around $410 billion.